Tuesday, August 29th, market analysis, Stan Ehrlich. Well, we've got a bit of a rally in the stock market indexes, a little more than I'm wanting, but it's not completely ruining at all the head and shoulder top potential. Now, I start out with stock market indexes as usual in the S&P in particular. And here we have up 5.5 points and right near the high of the day right now on the SPY. The timing is supposed to be approximately Monday of the next week for a rally high, like what we're looking at, maybe even a little bit less relative to what I was saying the last few days. But today we have a very strong bond futures rally, which implies rates may start to go down a little, which the market likes. So that's my excuse, if you will, for this 5.5 point rally. Again, a little more than I'd like. But it did not and has not ruined the potential for the last shoulder high on the head and shoulder top. Now in June 15, 16, in overbought condition, you had the first shoulder. It dropped down. Then you came up and in a major resistance area, you ended up with a bearish engulfing on the high day. That's great. And let me get rid of this annoying little label here for a second. There we go. And you have the head of the formation. It dropped down, a little breakaway gap to the downside, out of overbought and resistance area, all the way down to about the same price levels, which is very normal for a head and shoulder neckline, as the June lows. And that low again was on June 26th. So the low we made on August 18th is the pivot point to create the last shoulder high, which I think we're still in the process of making. Maybe a little higher than I'd like. You could see that the first shoulder was around 444, and here we are 48 1/3. But the neckline also slants up. The whole pattern should therefore slant up a little, and a last shoulder high a bit higher than the first shoulder high would be normal. It's stretching it a bit, but not killing the pattern. If we roll over here, or even a squeak higher, but I really can't let it go up too much more. The gap closure at 455.49, I do not expect at this point, but if it gets up there, it could end up with a double top. I still think this market is setting up some sort of a top formation to get down in September and into the October lows. Not as perfectly and incredibly fantastic as last year, but something, some buying opportunity. Take a look at every October, actually September, October, November, so you can pinpoint the low that usually happens during the month of October during the last many, many years. Go back decades, and you'll see that there is a low of some consequence. Again, not like last year's low, which was incredible. That was an 11 out of a 10. So something coming up in October on the downside. Little disheartening that we got this much strength at the moment. I'm expecting a turn down around the beginning of next week or very soon. Today would be great. Even toward the end of next week would be great, as long as we don't go too high. And we're, pushing it right now. So let's look at the DIA. We're going to have the same kind of situation developing. A higher high for the last shoulder. An upward slanted neckline that's a lot steeper, but not bad, than the S&P. And the pattern is still there. The top contains two bearish engulfing signals, neither of which, unfortunately, is at the highest high for the move. But again, I keep telling you these signals are sometimes created during the topping and bottoming process. There's 3 right there, none of which were at the highest high, and we ended up topping out a little late. I don't like that combination. But there's the highest. Well, that's not a reversal. So we'll see what happens here. Not super happy this morning with this amount of strength. The Qs have a slightly downward slanted neckline. The high today, like the DIA and the Spider, is above last Thursday's inside, if you will, inside shoulder high. And that's pretty much the case in all the indexes. So we had the inside. Are we making the outside shoulder now, maybe a few days early? Stay tuned. Okay. I'm going to skip the Russell for the moment. We're going to look at the bonds. We have an outside up day, bullish engulfing in interest rate futures in the 30-year long bond. That was a bit unexpected. I thought we might dribble off slowly to modest new lows over the next couple of weeks to help the stock market work a little bit lower and, well, down into October, actually. So this is not matching my story very well. This could be the cycle high a little late, but this bullish engulfing implies that the market is starting to build a bottom and now ready to head up, period. Let's see what happens. I can't help it. This is a green bullish engulfing out of a bottom area, out of support area, and looks like it's going to head higher, cycle high, cycle lower, whatever. It doesn't matter. So I have to turn friendly for the moment on interest rate futures. Let's look at the 10-year notes, and first the E-mini. So just like the Spider, trying to make a last shoulder high, you got the pattern, you got the neckline, nothing is completely ruined yet, but we don't want any more strength, and we do want a little more time, a few more days sideways. Next chart, interest rate future, NASDAQ, sorry, not quite a new high. So this is a little bit better reflection of the pattern. A couple of reversals involved in the topping out, but not the highest high. So very, very critical formation. It's going to work or not work, I'll guarantee you that. Let's see what happens very soon now. Next, bonds. We talked about it, outside up day, looking bullish at this point. I'm expecting a rally up into resistance. 10-year notes did not have a bullish reversal today, but is a new high for a couple of weeks and starting to get back into resistance. So I think we're going to rally some more. Next, crude. A little strength last few days. Nothing particularly unusual. We sold the top. We got a bearish engulfing on the high day. That's the important thing. I still think we're going to roll over and start to slip down below 77.5. Next is heating oil. Overbought conditions. We're starting to slip a little more. Yesterday was the first down day. I think we're going to challenge 2.9, and we'll see what happens if we can get there. If we break below that, we're probably going to come down quite a bit more. Next is the natural gas, already starting to head lower, lower low than yesterday, lower close than yesterday probably, and a new low close maybe for about 4 days, 3.5, 4 days. And the second potential lowest close for the trend down. We didn't get the high day, but we got a good sell signal, and everything is lower after that. Next chart. Precious metals and copper. All 4 metals we bought the bottom, all 4 of them. We have one of my strategies running, ER3, and we have bought the day after the green bullish at the bottom. I'm looking for more strength. We're starting to get into the previous trading range area. It looks quite plausible that we could get all the way back up to blue again. Excuse me, which would be 2030-ish. Next chart. Bullish engulfing at the bottom in silver. This is almost the lowest low. We were out of a short and went long all within a couple of days, and we're still long, and this is looking great, doing great. I think it's going to challenge the high of the trading range we saw before, 25 3/4. Not too far from it now, but you got to be careful. We're overbought. And at any time, it could start to turn back down, and then we'll get stopped out and take a profit on our long, probably, but not necessarily. It has to drop enough to hit the stop, and it might not. So overbought says it's going to start soon to slip back down. We are in a little area of resistance like before. We're super close. This has been a really good run, and the last couple of trades have been outstanding, let alone the fact that we had a double top formation with ER sell signals on both highs, a buy signal at the bottom there, a buy signal at the bottom there. Just been great with precious metals. Platinum, buy signal. Well, let's start at the top. Well, actually, yeah, at the top, sell. Bottom, buy. During the top formation, not so great. Dropped off sharply, and lately we've got a buy signal at the bottom in platinum and a hell of a good rally in progress, doing great. But again, overbought, coming up to the same levels that topped out before. Next chart, copper got the bottom, bullish engulfing. These are ER3 signals, so they get in on a retracement within a few days after the signal, not the same day of. That would be ER1. Next chart, soybeans. I pointed out possible exhaustion gap yesterday and possible island top in overbought conditions at the same prices it topped out before. So what do we got? We got a slightly lower low today than yesterday. Looks like that gap might still be there a tiny bit. And the market is kind of floundering down on the day, a modest amount, not very much. Let's see if this thing can start slipping even more. But on a very broad basis, what have we got? Super sideways trading range, long term, a year plus. New highs, period, maintained, sustained for a couple of weeks and a substantial amount. Bearish engulfing caused it to come back to support. Bounced. Got a bullish engulfing during the little bottom there. And now coming up to attack the highest highs again. Well, we all know about climate change. I don't know if that's going to have an effect. Obviously, it could. So let's see if this is a long-term bull market that can break into new high ground and keep on going up to 14, 50, 60, 15, 16. I don't know. But your tofu is going to cost a lot more. And your edamame also. So, waiting to see if we can get a breakout. But the overbought says some minor, maybe more important than that, downside move should start now. And today looks like it did start. And I said that yesterday. So next chart. We got the top on the soybean oil, 2 days down, couple of small days up here, floundering a little. I am looking for this double top formation, and the second high is a bearish engulfing ER sell signal to come down into the little support area at 58 3/4. We'll see what happens. Overbought couple 3 days in a row on soybean meal in resistance, my favorite combination, and starting today to work its way back down, probably down into the 370s again. Next, corn, little rally high for a few days, and now current quotes are lower than yesterday's close. Minor reversal in progress, could develop into something much more important. A lot of resistance where it stopped rallying. I think we're going to see new lows very soon, like wheat has already done. This is the wheat. We're now again in new low ground for a very long period of time. Long-term bear trend continuing, but prices are extremely low. So I'm not looking for a lot of downside potential here. Slowly lower. Next, cattle. We got the exact high day on what still might be a head and shoulder top. It rallied a little more in the last 4 days than I would have liked, but no rules have been violated. And right now we're about unchanged on a doji inside trading range day. So let's see if it'll start to drop off in the next day or two. Getting any amount stronger is going to cause me some major question marks as to whether the head and shoulder is going to end up working correctly. The minimum downside objective should be 171 1/3, which is testing the lows that we made back on June 21. We've got the first shoulder high pegged. We got the head of the formation pegged, and we didn't get a sell signal on the last shoulder, which, by the way, is not unusual because you're not overbought very much on these last shoulders. There's no huge rally. Certainly on the first shoulder, you can have it overbought. Yes, absolutely. That's where it's the most likely. And on the head of the formation, also very likely. But not on the last shoulder, and it didn't. So there's nothing really wrong with this. The breakout was good, few days down. The rally is a little bit more than I'd like, so I need it to turn down immediately. Next, hogs. Not too much to say. Miss Piggy's going sideways. I'm looking for a little bit more of a break. Next, OJ. Bearish engulfing yesterday, but not an ER official sell signal. That low is a tiny bit lower than the previous low, which was on Friday. So Monday was a bearish engulfing. Today, we're bouncing back into the middle and a little higher, obviously, than the middle of the bearish engulfing. And I think it's about to turn back down. Otherwise, and I don't look for a very big break, OJ has been in a huge bull move and shows no sign of any major top. But the usual corrections, which you see a lot of here, occur in bull trends. So are we going to have more of a minor correction, or is this very overbought condition the end of the line? Really can't tell quite yet. I like the divergence, no new high in the indicator, while there was a new high in price, but we need to close below 286. Next, cocoa. We're looking at a rally stronger than I expected. Maybe a little gap up also today into overbought conditions, around where the market topped out before. This looks like it's bruising, cruising for a bruising, going back down to close the gap, at least at a minimum, between today's low and yesterday's high. And this could turn into something a lot more bearish. I'm looking for it to turn down on cocoa. Next is coffee. We got the bottom, green bullish engulfing. We didn't get very much of a rally so far, a little on the disappointing side so far, but it is at the bottom of support. The trend is not in my favor, frankly, and we just might start to fail again. Long-term trend down, but at least we caught a good trade to the upside. I'm going to reserve commentary for another day or two, maybe. Overbought condition in sugar the sweet in an area of resistance where it topped out before a few months ago. I'm thinking this is building a top. We do have a slightly higher high today, still overbought conditions, and a current quote that's a little lower on the day. This would be a great place to have a bearish engulfing real soon and start a move down. I think it's topping out. Next is cotton the rag. Resistance stopped it yesterday, pulling back a little bit today. Certainly not very impressive. Not a lot going on here. I think the resistance is going to stop it again, and we could slip easily to 83.5, and we might even break out to the downside some and get down to 76 again. Next chart. We're back to the E-mini. Thanks for watching. Have a great day. Love those precious metals, and watch out for the S&P 500 and the stock market indexes. Keep your eye on them. Bye-bye.